Hi, welcome to the Market Alert for Friday, the 16th of October 2015. Starting off in the 5-minute charts, we've got just the two signals, both winners for yesterday. And this one in particular is of great interest because this came out 10 minutes before Dudley, the Fed member, was to speak. And as I said in yesterday's Market Alert, around 9 minutes when we looked at the news, that if you were a buyer of the market, there was a very good chance the market would actually go up when he spoke, because that's precisely what the Federal Reserve want. They want to give the impression that everything is fine in the economy, and the way to do that is to boost the stock market. If people's investments and pensions values are increasing, then they tend to think that everything is okay, when really everything isn't okay in the economy, which is interesting actually. And I'm just going to digress slightly, and I want to show you how bad things actually are. So if we just go to the Forex Factory site and have a look at yesterday's economic news, you can see here that the Empire State Manufacturing was forecast to come out at minus 7.3, and that came out at minus 11.4, massive drop. And then the Philly Fed Manufacturing also was forecast at minus 1.8, and it came out at 4.5. The US economy is heading for a major recession. It's never really recovered from the recession. It's just been political language that's made it look as if it has, but it never has. And we're still on emergency rates at 0% effectively in the US as well. We've been on emergency rates now for 8 years. So the whole thing is a charade, is smoke and mirrors. And again, coming back to this signal, you know that when the Fed members speak, they're doing it to actually try and pump the market up, and that's precisely what happened. The market came back to the minor support level here of 16,950 at this level. It retested here, and then you can see the market moving up 150 points, and then just having this other one before the close. This one here would have been a buy signal as well if we didn't have the trade out of hours. I'll just show you, if we just remove the hide out of hours on the signals, and then on the PTIs as well, and then click apply, and there you can see we have a lot more signals inside of the short there and the long there. So again, generally we trade within the white bands because the market tends to go quiet, but because Dudley spoke yesterday, the market moved lower. But normally that would just trade sideways, and then we get the kickoff in the latter part of the afternoon. So it's a shame to have missed out on that one, but that's not a bad thing or a good thing, because sometimes you can get a situation where the signals will give the wrong direction, because then the market goes in the opposite. But in this particular case, the market continued to move up, but not so bad. There's still over 40 points in this trade and in this trade before the close of yesterday. So the market's coming back now with some nice volatility as well, which is great to see. In the daily charts, well, this is where all of the fun really for me is, because again, you can see the market's going up on fresh air. There's absolutely no buying for yesterday's 200-point move to the upside, and again, it's just a matter of time before this lot starts to revisit the low that we saw on the 24th of August over here, just over to the left there, where we had 1,000 points down just before the open of the market on the 24th of August. It was Monday, the 24th of August. Never forget sitting there watching it, and it just kept going and going and going. That's the second one I've seen during this time. I had half of the money out of the trade, and then the market continued lower. And there was another one as well in 2010 where the market dropped to 1,000 points as well, which was blamed on somebody's trigger finger in one of the banks, which again was absolute nonsense. It was just testing to see how people would react if the market actually fell. So no major players in this market. It's absolutely fascinating. I don't think I've ever seen this, where a market's actually moved up 1,000 points and there is no new buying. And even on the down days, there's definitely an increase in volume on the down day, but again, there's no sort of red bars that you would expect to see when there is actually selling in the market. So this market's just waiting for whatever to actually do something. It's most strange, but as long as the volatility continues like it did yesterday, then that will be fine by me. You just need just a bit more so that we can maintain the momentum. We don't want too much and we don't want too little, and yesterday was more or less there. In the news for today, let's see what we've got. Are there any Fed members speaking today? 2:15, that's all out before the market opens. We've got the prelim UOM consumer sentiment. This is forecast to be higher at 3 p.m. We'll wait and see on that one. Everything that's coming out at the moment is negative and less than forecast. If it is, who cares? Just move the market higher. That seems to be the opinion now. Bad news is good news, and that's what they keep doing, is turning the market around and moving it back up. And the JOLTS job openings, that's a medium impact as well, so it shouldn't be too much of a problem. Again, just a word of warning for those of you that are new, Friday evenings can be quiet, so I'll just give you the heads up on that one as well. If it's been quiet, very quiet, between 4:30 and 6:30, it's very unlikely it will become any busier thereafter. So the first couple of hours on a Friday afternoon tend to be the better part, but then there are occasions when the market, if it's moving strongly in one direction, will continue with that in the latter part on a Friday afternoon, but Friday evening. But you just have to wait and see how the market unfolds today, and if I notice anything strange, then I'll drop you an email as well. And finally, on the implied volatility, this is dropping down nicely again, 13.35. We want this down around 10% for the next big correction to the downside. That's where the big moves take place. You can see when it comes back here. I've monitored the implied volatility since 1991-92, since discovering this, and it's never failed. And even in the last big corrections as well, spot on. And even when you get this big spike and doubling of the implied volatility, then the market stops and moves back to the upside, which is what we've seen since August the 24th as well. It looks a very boring thing, boring graph there, but it's one of the best things in trading for the bigger picture, no doubts about it, if not the best for indicating where the market is likely to go. Right, that's it from me for today, also for this week. As ever, thank you for your support, it's very much appreciated, and all things being equal, see you in Monday's edition. And thanks for watching. See you in the next one.